Good afternoon, traders. It's Chris Chavez with Blue Line Futures, and it's your daily midday market minute. Stocks are continuing to rally off of treasury yields coming off their highs. But before we get to it, if you're watching this video, like and subscribe. If you're on our website, there's also a link to direct you to YouTube, and you can subscribe that way. We would love for you to follow us. We would love for you to help us build our following. So treasury yields are continuing to slide here today. We got a lot of jobs data this morning, non-farm payrolls. We also had the unemployment rate, and we had average hourly earnings. Looking at average hourly earnings, we came in at 0.2 versus 0.3 month over month. So still looking like disposable incomes for the consumer are shrinking. Also looking at some of the jobs data, looking at non-farm, we got a print of 150,000 versus consensus estimates of 180. So we're really seeing, some weakness starting to look like it's trickling through the labor market. Again, the unemployment rate also came in a little weak, 3.9% versus 3.8%. So, looking at some of that data, it's definitely why, you're seeing treasury yields coming off of their highs here again, providing that relief to stock indices here today. The Russell, very interest rate sensitive indice, widely in positive territory. NASDAQ, S&P as well. We're really going to want to keep an eye on not only the data moving forward, because as the Fed has mentioned, the risk is just about balance. They don't want to, over tighten, but they also don't want to loosen financial conditions just too soon yet. So the risk is just about weighed. And really, I think the only way you're going to see another interest rate hike is if we had, a ridiculously hot, economic data point, whether that be jobs or inflation numbers, particularly on the inflation front and the Fed's fight against inflation. So we're going to want to keep an eye on the data, but also some of these support and resistance levels to kind of gauge momentum of the market moving forward. Looking at the S&P 4,400, that's going to be a major psychological level you're going to want to keep an eye on here moving forward. Break and close above about 4,400, 4,405 definitely is going to signal more upward momentum. It's going to show a lot of strength. So that's definitely what we're going to want to see to continue to see more strength. NASDAQ 15,200 to 15,242 or so. It's going to be another major level to keep an eye on there. Gold has just failed to, rally with a lot of the other risk assets. Despite the dollar coming down here today, despite this weak jobs data, gold is just about doing nothing. Really, it's a stick in the mud at this point, and we're going to want to see a break and close above 2009 to 2012. You look at a chart, these last 4 or 5, 10 trading days or so, we've hit a triple top, quadruple top up there, and we're going to want to see a break and close above there to see more upside in gold as well. If you have any questions, reach out to our trade desk. We're here for you. Remember, futures trading involves substantial risk of loss. It is not suitable for all investors.